Ethereum, ETH, price prediction for today, July 30, 2021. Crypto Rating presents the comprehensive Ethereum price prediction and forecast that provide a better insight into the current ETH market situation, future expectations concerning the price action and Ethereum market capitalization. It is important to the grasp of the projected changes in supply to properly calculate future market capitalization, hence the future price of the cryptocurrency under review. The trading volume data allows to assess the overall strength of the trend, which, in turn, provides means for a more precise ETH price forecast, and predicts the shifts in supply and demand that play a decisive role in price changes in both immediate and distant future. The current tendencies with regard to changes in the average trading volume reveal the increasing demand for ETH coins on the backdrop of the decreasing supply of the corresponding cryptocurrency. To get a better understanding of recent ETH market fluctuations, we introduce the Crypto Volatility Index, CVIX, that clearly depicts the present price dynamics and offers some hints at the possible scenarios of future price action. Crypto rating always proceeds from a range of factors and when analyzing the price of Ethereum and offering short, medium and long-term price prediction using our proprietary algorithm that successfully incorporates artificial intelligence and specifically deep learning mechanisms. Before delving into a more detailed Ethereum price prediction, we offer a short recap of the history of KEX, the mechanism of its calculation, and also a few important tips on how to trade when KEX is low. The primary purpose of the VIX is to efficiently measure the expectations of market participants concerning the price movement of the S&P 500 index over the coming 30 days. The amount of fluctuations present in the market at a given time plays a key role in determining the value of KEX because it indicates the degree of negative tension among market participants that we simply call the fear, the main driving force behind the volatility. The index also takes into account the occurrences in the crypto market that has a proven, and increasing, correlation with the Bitcoin price action, a dominant cryptocurrency that exerts a profound impact on the altcoin market, including that of Ethereum. To summarize, the KEX displays how fearful are the market participants of the price of Ethereum dropping significantly over the last 30 days, which is synonymous with expected negative volatility. If KEX is high, 51 to 100 value, it flashes red and signals the increased probability of sharp price fluctuations. The green KEX, 1 to 20 value, on the other hand, means that the participants expect the market to remain calm and predictable over the said period of time. Yellow KEX, 21 to 50, is a moderate value meaning that traders are to expect some swings to the upside or the downside but without any disruptive changes of the overall trend structure. The KEX of Ethereum is currently flashing 53, which means that traders must brace themselves for significant price fluctuation that needs to be dealt with accordingly. The most basic approach to use when trading with KEX in any market, whether it is cryptocurrency or stocks, is to set the buy triggers when the volatility goes overboard. For those traders who already acquired a position, the high red KEX implies that the time has come to elaborate on an exit strategy since high volatility combined with fearful sentiment generally results in a sizable price drop. For a comprehensive Ethereum price analysis, let's take a look at the price action on the monthly chart first to determine the key levels of support and resistance that the price is going to interact with on its presumed path to the all-time high. Our Ethereum price prediction algorithm takes account of not only the reading of the KEX but also the all-encompassing data of historical price behavior, fundamental characteristics of the coin and the prospects of project's future development, the emerging candlestick patterns, as well as the signals coming from both leading and lagging indicators that also afford us an opportunity to foresee the measure of volatility and predict the following price action.